Now look at both of those charts. At exactly like whatever it is, 170 days after the halving, they both have this correction, the liquidity correction. It's all the same thing. This is the everything code. It's all driven by liquidity and the Bitcoin halvings and the patterns that emerge. So that correction, however long that takes, call it a month, 3 weeks, that correction ushers in phase 2 of the banana zone, which tends to be the violent propulsion of alts, the banana zone signature pattern.
Real Vision founder and CEO Raoul predicted the first part of the banana zone several months ago. He described it as a phase in the cryptocurrency market that typically occurs during periods of heightened global liquidity, leading to rapid and significant appreciation in crypto assets. Despite the intense criticisms when the rapid price gains didn't come as expected, Powell stuck to his guns and insisted that there is a strong correlation between global liquidity cycles, which have shown clear patterns since 2008, and changes in the financial markets. According to Powell's Everything Code framework, global liquidity cycles drive macroeconomic conditions, which determine market cycles, especially for secular markets like the crypto market. When we reach certain points of the global liquidity cycle, Powell believes it's nowhere but up for crypto asset prices, because central banks are certain to provide the needed push for prices in the form of various quantitative easing exercises, such as interest rate cuts, stimulus packages, and straight-to-the-point money printing.
Real Vision CEO Raoul predicted the banana zone, a phase of rapid crypto market gains driven by global liquidity cycles. Despite criticism when initial price surges didn't materialize, Powell stood by his theory, linking crypto bull runs to central bank actions like rate cuts and stimulus. Recently, Bitcoin hit an all-time high of $83,987, with altcoins like XRP, Cardano, and Solana also soaring. Powell describes the current consolidation as the sell-off before blast-off, predicting Phase 2, an explosive altcoin season, will begin soon, pushing crypto prices to unprecedented highs. Watch clips from his video, and don't forget to like, subscribe, and turn on notifications.
So let's compare the previous cycles. Now, it's a little bit difficult to see with all of the various colors, but basically you can see from the orange, the current pattern is looking very similar to either the 2015-18 pattern or the 18-21. We think it's much closer to the 2015-18 pattern, and that we've got an extended move to come, an extended banana. So I've always been asked and talked about my probability weightings. I do not see a peak in the cycle early, because guess what? The business cycle is at its bottom. The White House has just come in with all of the new people. Their job, grow. They will force this economy to grow. And therefore, the business cycle has at least 9 months, probably 12 months to play out. We could even see an extended cycle into 2026, but it will be a cycle. It will not be a super cycle, because liquidity gets withdrawn and then gets eventually re-added again as the economy heats up. But the back end loaded, so we have a run into year end, a correction from liquidity, then a run into March, April. That usually is altcoin season central. Then we tend to have a pause or a pullback post-tax season. Late summer, we kick off again. 2017, we had a Bitcoin 10x'd in 4 months. So all sorts of drama can happen. So the lifestyle chips component that I've talked about a lot, I would use probably the Feb, March, April strength. If you want to take some lifestyle chips off, 20%, 15%, 30%, 50%, whatever it is you want to maintain your lifestyle, then you've got the power to run the second half of the bull market, because you're going to be in fear all the way. Am I going to lose my money? Am I going to get this wrong? Is it going to be 2021 over again? If you've secured that thing, your mortgage on your house or your car payment or that holiday, or paid off your debts, whatever that lifestyle goal is, get that sorted out as fast as possible. It will clear your head and allow you to extend the cycle, or if not, run multi-cycles. The real wealth is actually made not by trading the cycle, but by running multi-cycles, because it compounds over time. So if you think of, the depths of macro crypto winter in 2018, we were down at, I don't know, 2,000 Bitcoin. Where are we now? 100. That's a 50x. You didn't have to do anything. You didn't have all the drama, all the ups and downs, and oh my God, FTX and all of this. All of it didn't matter. So just keep that in mind when you get, all of you are over-focused on the cycle. I want to sell at the top and buy at the bottom, and I'm going to crush it. Take your lifestyle chips off. You can then run whatever you want. So we're getting closer to that period. Here is the comparison when you put them all together, the last two halvings and where we are now. So where we are now is very similar to the white one. And the white one is the halving from the 2016-17 cycle. Now look at both of those charts. At exactly like whatever it is, 170 days after the halving, they both have this correction, the liquidity correction. It's all the same thing. This is the everything code. It's all driven by liquidity and the Bitcoin halvings and the patterns that emerge. So that correction, however long that takes, call it a month, 3 weeks, that correction ushers in phase 2 of the banana zone, which tends to be the violent propulsion of alts, the banana zone signature pattern. So are we overbought yet? Should we be worried? Should we be thinking, my God, what happens if it's over 100,000 and it tops here? Well, our core risk indicator is nowhere near overbought. We're still barely mid. So it's suggesting we've got a lot further to go. When we look at the log regression channel, this is my kind of chart of truth. The thing that I find is immensely helpful. Well, we're not even at the mean of the trend. So we're still below mean. Now we're going to go to 1 or 2 standard deviations. In fact, it's never not gone to 2 standard deviations. 2 standard deviations, you're talking $500,000 plus Bitcoin. Now, maybe it doesn't. Maybe the law of diminishing returns kicks in and gets to 1 standard deviation. Well, that gets you to 250,000 or so. I'm not giving you projections. I'm giving you contextualization of what an exponential trend looks like. All to play for, so there's nothing to worry about. Cycle top finder. This has been a really good way of finding the cycle top. We are nowhere there. Absolutely nowhere near. So again, chances are we'll have a little pullback in January. First we'll hit year end, a little pullback in January, and we'll just keep ripping higher until we eventually hit the cycle top. But that's a long way from now and much later towards the very end of 2025 or even into 2026. We can't tell yet. We see how liquidity plays out, but that's where we are in the banana zone. So picture this. If we just followed what happened in 2017, the last time Trump got in, government came in, is we had this correction driven by liquidity. It would take us back down to, let's say, the gap on the chart, something like 80,000. I'm not sure that we get that because of beginning of the year flows from institutions and other players, but a correction is the most likely outcome. It's very unlikely for it to go in a straight line. And you're all going to go, what should I do? This looks terrifying. Oh my God. Again, please, it's noise. Don't this upstairs. Expect 30% pullbacks. So please do not start thinking, how do I hedge this? Do I top out? Do I sell mine up and buy them lower? What you'll do is you will lose out and you will miss the rally because you've overcomplicated a simple trade. The simple trade is do nothing. So please think about doing nothing. We also don't know if Bitcoin falls, whether alts take that pause and everybody focuses on altcoins and alts rip higher. So we don't know the structure of this. So again, don't do anything unless this is why we don't use leverage, right? So that's my view on this. In the end, this is the game. The game is the banana zone. Look where we are. We've just started the banana zone. We've had the boring zone. We all suffered that. We had a big boring zone this year, much like the 2012 boring zone. We've just started. Now look at the beginning of each one of these. There's this little wiggle, which is the correction that happens in January. Great. It means nothing on the chart. So the banana zone lies ahead.
Raoul Pal emphasizes that current corrections are insignificant compared to what lies ahead. He predicts Bitcoin will hit new milestones, with cryptocurrencies like Ethereum, Solana, Dogecoin, and Sui outperforming and reaching record highs before the cycle peaks later this year. Powell advises taking some profits before tax season in March to stay mentally
And
prepared
Sui,
for the volatility
outperforming
of
the
bull
largest
market.
cryptocurrency
In his video,
and hitting
he
new
shares tips for
all-time highs
navigating market
before the
cycles,
cycle peaks toward the
discusses
end of the
key
year.
economic indicators, and highlights their impact on crypto prices. Stay tuned for more insights from Powell's analysis.
Okay, let's go back to the liquidity story. So the liquidity story here is, oh my God, and I've been sent this chart 1,000 times by people. Oh my God, what happens? Is it all over? Is this the peak? Is this the end? Do we get out now? What happens? What happens? Panic, 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 bullshit. Okay, we had exactly the same thing last time Trump was elected. The dollar was strong, rates went up, liquidity contracted, the market had a big rally, which is Bitcoin. And then in January, because of the lag, what we found was a sharp 27% correction in Bitcoin. And then it ripped higher so much, in fact, that it went up 23x. Now, I'm not expecting that because this was a much earlier cycle. But what we're saying is that correction is not to fear. That correction is just a marker point from phase 1 of the banana zone to phase 2 of the banana zone. Phase 2 of the banana zone usually goes into US tax season, which is like April. Then there's usually a consolidation because people have to sell tokens to pay taxes. And then there's usually phase 3 of the banana zone is the rip into year end. And that's all driven by the liquidity cycle. So we can see these banana zone periods as they start appearing. Bitcoin just does this every time, like Doge does. So we've just broken that part of the cycle. So this is the start of the banana zone as we start accelerating higher. Going back to liquidity, here's Global M2. You see, Global M2 does this a lot. It also wedges. I love a wedge. They're the best chart patterns in the world. And what happens is it has a break higher, then this consolidation. It's happened every time we've got to the banana zone period, the kind of US election cycle, stuff like that. So we've done that. We've corrected the breakout. Now, Global M2 is actually driven by the strength of the dollar. Now, the dollar has started to weaken. We expect it to weaken going forwards. And that will then reignite the next phase of the banana zone as we start bouncing higher. You can see those corrections in M2 were short. Now, the reason being is we've got to roll all of this global liquidity. We've got massive amounts of debt to roll over, and you need liquidity to do it. So that is the game, the big game, the everything code game that I've talked to you about. So the everything code game is very much at play. This is a phase, the early phase of the breakout. This year is the year of liquidity, and that's why the year ahead, and that's why the banana zone plays out so beautifully. So we talked about Global M2 being driven by the dollar. So let's look at the dollar. And also rates is the other part of financial conditions and liquidity. So what we're finding is that the dollar, as you can see, and rates had moved away from trend. That was the strength that we saw. This is what creates the down move in global liquidity. Now, what's interesting is the Citi Economic Surprises Index, which is an index of whether the economy is beating forecasts or underperforming forecasts, says we should now have a period of underperforming forecasts because it was driven by the tightening of conditions from the dollar and rates. Now, obviously, we know if the economy starts underperforming forecasts, like we just saw the unemployment rate rise to 4.2%. Once we start to see things like that happening, what happens is people start thinking about we need to cut rates more. So that's a very interesting thing. So here in white is rate cuts priced in. Very few rate cuts priced in. So there's like, I don't know what the scale is here, but there's very little rate cuts priced in, but it's driven on a forward basis by the dollar and the long end. So it's now saying, as we weaken economic growth, we should start to see rate cuts. And then, as you can see, we're starting to see the pickup again in financial conditions, which is important, and I'll come into that in a minute. So when you put it all together, they're all the same thing. Fed rate cuts, the DXY, 10-year bond yields, they're all highly mirroring each other. 10-year bond yields seem to be suggesting faster and faster that the dollar should roll over and rates should roll over too. That creates financial conditions. And now what we've got here is financial conditions index, which is rates, the dollar, and oil prices, has been consolidating for a period of time. And it is suggesting that the ISM, which is the business cycle, the Institute Supply Managers Survey, should be much higher, i.e. we've got economic growth to come. It leads by 9 months. So in 9 months' time, the economy will be a lot stronger than it is today. And this is going to be important for you. So all of the stuff we talked about, rates, the dollar, even oil prices, all drive financial conditions, which drives cryptocurrencies, which drives markets in general, which drives the business cycle. When we look at the forward-looking basis on the business cycle, we can see things like the Philly Fed. Well, their new orders index is exploding higher. Now, whether this is just on the Trump victory or whether it's on orders they see in advance, not sure yet. Philly Fed expectations index exploding higher. Empire Manufacturing, that's for New York, exploding higher, all suggesting the ISM is going to be super strong going forwards.
Raoul Pal's belief in cryptocurrencies stems from macroeconomic, technological, and structural factors. He argues that digital assets thrive during periods of increasing global liquidity, outperforming traditional assets as central banks ease policies and print money. Pal views Bitcoin and crypto as hedges against currency debasement, offering long-term value. Highlighting crypto's role in transformative technologies like DeFi, tokenization, and NFTs, Pal sees parallels to the internet's early adoption, predicting crypto markets could grow to $100 trillion by 2030. Do you share his optimism? Which cryptocurrencies do you think will shine next year? Share your thoughts, like, and subscribe for more insights.